Inside the House of Money, Top Hedge Fund Traders on Profiting in the Global Markets, by Stephen Drobny, foreword by Joseph G. Nicholas. Imagine a world where a single decision can make or lose billions of dollars in the blink of an eye, where traders bet not just on stocks, but on entire countries, predicting the rise and fall of economies with almost supernatural precision. This is Inside the House of Money, a rare behind-the-scenes look at the minds behind the world's most powerful hedge funds. A world that is as cutthroat as it is brilliant, where only the most calculated, the most fearless, and the most visionary can survive. For these traders, the game never stops. The stakes, unimaginably high. A large hedge fund office, sleek, glass-walled, with traders intensely focused on their screens. On a screen, a flashing alert. Breaking, central bank cuts interest rates. In seconds, phones ring, hands fly across keyboards, trades are executed. Welcome to the world of global macro trading, where economic events shape financial empires and fortunes are made on a trader's ability to see the future before anyone else does. Stephen Drobny takes us on an exclusive journey into the world of global macro hedge funds, where traders use a unique blend of economic insights, data analysis, and gut instinct to profit from global markets, stocks, bonds, currencies, commodities, anything that moves. But what drives these traders? Is it greed, power, or the unrelenting thrill of the game? These are the masters of global macro trading. People who don't just watch history happen, they make history happen. But what really happens inside this world, and who are the people playing this high-stakes game? Let's find out. Chapter 1. What is global macro? Hedge funds have always been mysterious, but global macro funds take it to another level. These are the traders who don't just bet on a stock, they bet on entire economies. They don't just watch the markets, they move the markets. A new government policy, they're already predicting its effects. A shift in interest rates, they've placed their bets weeks ago. It's not just about stocks or bonds, it's about understanding the pulse of the world. The best traders don't just follow the news, they are the news. Soros, Rogers, Tudor Jones, Robertson. These are the names that shook global markets. They didn't just win trades, they changed history. How did they do it? What made them different? Chapter 2. The Rise of the Hedge Fund Titans. A young John Maynard Keynes, dressed in a suit, writing feverishly at his desk. He utters, "The market can remain irrational longer than you can remain solvent." It all began with John Maynard Keynes, one of the greatest economic minds of the 20th century. He wasn't just a theorist, he was an investor, a trader, and some say, the original hedge fund manager. Keynes used his deep understanding of macroeconomics to make investments that defied conventional wisdom, turning crisis into opportunity and opportunity into fortune. But the modern hedge fund world, that was built by traders who took Keynes's ideas and weaponized them. They didn't just study markets, they moved them. In 1992, Soros made a $1 billion bet against the British pound, one of the boldest trades in financial history. The UK was locked into the European exchange rate mechanism, a system designed to stabilize currencies, but Soros saw the cracks forming. He knew the pound was overvalued. He knew the British government couldn't defend it forever. So he bet against an entire country and won. It wasn't luck. It was calculated, relentless and ruthless. And it cemented Soros as one of the greatest traders of all time. Then there was Paul Tudor Jones, a man who didn't just survive the stock market crash of 1987, he profited from it. Jones studied the past, and he saw history repeating itself. The market was overheated, running on greed and speculation. Everyone was blind to the danger, except him. He turned the biggest market disaster into his biggest payday. These weren't just traders. They were tacticians, visionaries, chess players in a game with no rules. These were the kings of global macro trading. Their methods, unlike anything seen before. And the game? It's still being played. Chapter 3. The House of Money. Dark-lit trading desk, multiple screens glow in the dim room. A trader sits in silence, his face illuminated only by the numbers flashing on his monitors. His breathing is slow, controlled. Outside, the world moves at normal speed, but in here, every second is a battlefield. Stephen Drobny brings us inside the rooms where these billion-dollar decisions are made, where a single click could mean a life-changing profit, or the end of a career. Drobny interviews some of the greatest macro traders alive, the minds that shaped the financial world, the unseen players behind market crashes, currency collapses, and economic booms. What drives them? What fears keep them up at night? And how do they see the future before the rest of the world catches up? But here's the thing, these traders are not the same. Each one has their own style, their own philosophy, their own way of seeing the world. For example, some rely on numbers, others trust their gut. Some have PhDs, others never finished college, but they all share one thing: an ability to take massive risks and stay one step ahead. Meet the masters of the game. The family office manager, Jim Leitner. Everything is an asset if you know how to value it. Leitner doesn't just trade stocks, he doesn't just trade currencies. He looks at everything, from real estate in Brazil to rare art to distressed corporate bonds. If it has value, he finds a way to profit from it. To him, trading isn't just about finance, it's about understanding the world in ways others don't. The prop trader, Christian Sivajothi. I don't need to be right all the time. I just need to be right at the right moment. Sivajothi came from the legendary trading floors of Goldman Sachs. He doesn't gamble, he calculates. He doesn't chase trends, he sees them before they form. While others react to market moves, he's already in position. By the time the headlines break, his trade is done. The central banker, Sushil Wadhwani. If you understand how central banks think, you understand how the world moves. Sushil Wadhwani isn't just a trader, he's a former Bank of England economist. A man who has sat in the rooms where interest rate decisions are made. Most traders guess what central banks would do next. Wadhwani already knows. The floor trader, Yara Harris. You can have all the fancy models you want, nothing beats experience. Yara Harris is old school. He learned the game on the floor, where you had to read people as much as you read charts. While others rely on algorithms and PhDs, Harris relies on gut instinct and decades of experience. Some people say the markets have changed. Harris would tell you, human nature hasn't. There is no single way to win the game. Some traders master statistics, others master psychology, some predict policy, others predict panic. Chapter 4. How hedge fund traders think. So, how do these traders make their billions? They don't follow trends, they create them. They don't listen to the news, they are the news, and they don't just invest, they bet on the future of the world. How they do it? The 3 pillars of microtrading. Hedge fund managers don't have crystal balls, but they have something just as powerful. They analyze history, they predict policy moves, and they read the psychology of the markets better than anyone else. One trader put it best: the best global macro traders are a mix of historian, economist, and gambler. History repeats itself. A country's currency collapses today, it's happened before. A stock market bubble inflates, we've seen that too. The key is knowing when history will rhyme. But history alone isn't enough. The best traders understand governments because governments move markets. Most investors react to policy. These traders predict it. They know how central banks think, how politicians bend under pressure, how economies shift based on fear, greed, and the weight of public opinion. And that brings us to the final piece of the puzzle. Psychology. Markets are made of people. People make decisions based on emotions, and emotions are predictable. Greed, fear, panic, euphoria. Every chart, every price movement, every market crash, it all comes down to human emotion, and the best traders exploit it. But for every winning trade, there's a disaster waiting around the corner. For every billion-dollar win, there's someone on the other side of the trade. Julian Robertson's Tiger Fund in the late 90s. Once one of the greatest hedge funds in history, now closing its doors after betting against the dot-com boom for too long. Even the best traders lose, they miscalculate, they overestimate their edge. 2008, hedge funds betting against the housing market make billions, while investment banks like Lehman Brothers collapse overnight. The market is brutal. It does not care who you are. It only cares if you're right. One wrong move, and you're out. The difference between a legend and a forgotten name: risk, control, and knowing when to walk away. This is inside the house of money. Not every trade is a win, not even for the legends. Even the best traders have faced disastrous losses. Some of them came back, others disappeared forever. 1998, Russia defaults on its debt. Hedge funds lose billions overnight. The ruble collapsing, crowds gathering in panic. Hedge funds in New York, phones ringing off the hook. Traders unable to get out of their positions fast enough. 2008, the financial crisis wipes out entire firms. Lehman Brothers employees carrying out their belongings in cardboard boxes. News anchors calling it the worst financial meltdown since the Great Depression. Hedge fund managers pacing in glass-walled offices, realizing their bets on mortgage-backed securities were the wrong ones. Traders are caught off guard, losing fortunes in minutes. January 15, 2015, screen showing the Swiss franc skyrocketing against the euro. A trader's face goes pale. His firm had leveraged bets that the Swiss National Bank would keep the currency stable. They were wrong. Within minutes, accounts are wiped out. One moment, you're on top of the world. The next, you're fighting to survive. The psychology of a loss. Here's the thing about great traders. They know how to win. But more importantly, they know how to lose. Paul Tudor Jones once said that the most important rule of trading: play great defense. The ones who survive don't panic, they don't freeze, they don't deny reality. Because losing is inevitable. It's part of the game, the difference between the ones who make it and the ones who don't. The best traders accept when they're wrong, and they move on. Even the best make mistakes. But the ones who survive, they learn, they adapt, and they come back stronger. It's not about never losing. It's about how you recover. This is the game, and it never stops. The real question is, when you lose, will you know what to do next? So, what can we take away from inside the house of money? The best traders don't just look at one stock. They look at entire economies. A trader in a dimly lit office, screens filled with charts of global GDP, oil prices, and foreign exchange markets. He's not concerned with a single stock. He's betting on the direction of nations. They predict recessions before the headlines. They see inflation coming before central banks react. They spot weaknesses in currencies before governments even realize they're vulnerable. 1992, George Soros places his infamous $1 billion bet against the British pound. Soros breaks the Bank of England. Then cut to 2008, Ray Dalio explaining his forecast of the financial crisis years before it happened. They don't just trade, they anticipate history. Take risks, but manage them. Every great trader has lost. Julian Robertson in the late 90s, his hedge fund, Tiger Management, once worth $22 billion, now forced to shut down after betting against the dot-com boom too early. The difference between those who survive and those who don't. They never let a loss destroy them. Paul Tudor Jones once said, "Losers average losers. Winners cut their losses." Then a trader staring at his screen. His trade has gone wrong. He exhales. With a single click, he exits the position. The loss is painful, but manageable. Risk is the price of entry. But if you don't respect it, the market will eat you alive. Be flexible. Markets change. And so do the best traders. Jim Leitner, he trades everything. Stocks, bonds, real estate, even rare artwork. The market shifts, and he shifts with it. Stanley Druckenmiller, once a top Soros trader, he adapts constantly, never sticking to a single strategy, never holding on to an outdated playbook. The worst mistake a trader can make, getting too attached to an idea. The best traders don't fight the market, they ride its waves. Inside the House of Money is more than just a book. It's a rare look inside the minds that move the world's markets. They don't just trade numbers, they trade power, they trade history. So, what do you think? Could you survive in the world of global macro trading? One decision, one trade, one moment. That's all it takes. Subscribe for more deep dives into the world of money, markets, and power.